bearish engulfing signal. Traders looking for an indication that an upward trend will turn downwards are often helped by the bearish engulfing signal. The signal is composed of two Japanese candlesticks of different sizes and opposite colors. The signal is useful in trading any equity. The value of this signal is in predicting the reversal of a bull market. What is a bearish engulfing signal? This signal is composed of two Japanese candlesticks. The first is a light-colored candle which indicates that a stock, commodity future, or Forex currency is still going up in price. The second signal is a dark-colored candle that indicates a down day. The second candle engulfs the first and reverses from an upward to a downward direction, which gives the signal its name. What does a bearish engulfing signal mean? The first candle of the bearish engulfing signal continues the upward trend previously established. The significance of the signal comes from the second day of the pair. The market gaps up to start the day, which means that the second candle starts higher on the equity price chart than the top of the previous candle, the previous day's closing. The equity may trade higher than the opening price, which will be indicated by a shadow extending above the candle. But the equity will end the day lower. In fact, the equity will end the day lower than the previous day's opening price. Thus, the second candle extends above and below the first on the equity price chart. The second candle engulfs the first. This Japanese candlestick signal is meaningful when it occurs after a well-defined uptrend and should be interpreted with caution in other cases. Be careful when there is a doji signal. This nearly flat-line candlestick signal can be engulfed by the subsequent trading day because the opening and closing prices of the doji are so close. When you see a doji, be careful not to see the broader trading day and call it an engulfing signal. Previous days and the degree of engulfing. The bearish engulfing signal is a useful indicator when it occurs after a well-defined run-up of a stock price, futures price, or the price of one currency versus another in a Forex pair. The predictive value of the bearish engulfing signal is greater if the second downward candle engulfs not only the first candle, but its shadows as well. If this happens, it means that the second day not only gapped up above the previous day's close, but also above the highest trade of the previous day. It also means that the day closes not only below the previous up day's opening price, but above the lowest trades of the previous day. The bearish engulfing signal and market sentiment. This signal indicates that buyers are turning into sellers. It does not matter whether buyers have taken a second look at fundamentals or if traders have gotten spooked by an item in the news. The bearish engulfing signal tells the candlestick trader that a market turnaround in the bearish direction is likely.